Talk some energy and crude oil up today. Risk assets well bid. Equities still higher. Russell pushing 3% into the bell. Bob Iaccino is joining us, founder and chief strategist of Path Trading Partners. Bob, how are you navigating the Omicron volatility, or maybe the Powell volatility? What is it according to you?
I think it's Powell volatility. I think it's strange that he basically flipped to moderately hawkish right after he got renominated. I'm not a conspiracy theorist, but I thought that was interesting. He definitely spun pretty quickly. And I think crude oil is likely overreacting to it a little bit. But we are not long it. I mean, you went from basically a move of about 38% higher to, I'm looking at it right now, it's about 21% lower from those highs above $85. That's a big move, and crude oil will bite you if you don't let it stabilize. So that's really what I'm looking for. Plus the fact that they're going with those 400,000 barrel increases in January. We don't know what they'll actually increase because OPEC says one thing and delivers another. But we're actually seeing a little bit more activity in shale drilling. It seems like the shale drillers they've pretty much exhausted the drilled but uncompleted wells, and now either have to spend a little capex or close down, which they're not going to do. So we're going to see some new wells soon. We'll see how well those produce, no pun intended. So it's going to be interesting. It's going to be volatile, but I think the trend is definitely flipped because even though I believe Omicron, the whole reaction of Omicron is overdone, travel bans cut jet fuel demand. So it is what it is. I mean, the demand is definitely less than it was a week and a half ago.
All right, so the chart right now doesn't offer much solace, in your opinion, to try and take part in either direction.
No, it just doesn't offer opportunity. We had a nice double top, but it kind of cleared out pretty quickly. We actually had a fairly reasonable signal, but we didn't take it simply because the volatility had increased so much we couldn't get the correct risk reward. That double top played out and then some in terms of where the price of crude actually went. But again, we didn't get involved, and I need things to stabilize and either have a less volatile trend or have a range that's reasonable to trade into. You know, just because a market's moving doesn't mean the move is yours. I mean, that's the equivalent of walking out of a restaurant and taking everybody's to-go bag because all the leftover food is yours. It's not. Every move in the markets that you pay attention to is not necessarily a move you should be involved in.
Okay, so Bob, what do you want to get involved in right now? Is there anything that went on sale that presents a good opportunity? Is it in stocks, other commodities? Is there anything here that looks like it's time to pick up some of the downside and bet on a turnaround?
Well, strangely enough, we actually emptied our stock portfolio over the last 10 days or so.
Wow.
And so I'm looking for, completely empty. We just have.
So it's you that's been behind the selling. Thanks, Bob.
Well, we did it before that, but we didn't make money. Just to understand that, we had mild losses. We have an initial risk, and we cut trades prior to that full risk being reached. So we cut trades at about 30% of what our full loss would have been. So that's a victory given what's happened. I just don't buy the move back yet, because yesterday when we got that second wave sell-off in the equities, the market was for sale. Otherwise, you would not have seen one case of Omicron promote that kind of a move if the market wasn't already for sale. That to me felt like a lot of people going, okay, we got a little bit of a rally back. I'll just hold, wait at my price. You get that one Omicron news and everybody just dumps. We were already out at that point. Thank gosh, for people who don't want me to take the Lord's name in vain. We were already out of it, so I was good with that. But now we're looking to reload on some longs because I think the Santa Claus rally could still be intact depending on the Fed.
Oh.
I was looking to see if Jerome Powell actually reversed what he said in the testimony before the House, what he said in testimony before Congress. He didn't. So I think...
I thought Jay Powell was Santa Claus, Bob. Didn't he already tell us we're getting coal? Didn't he just tell us that?
Well, again, I don't remember which member it was. I believe it was Esther George this morning, maybe, who basically said, if we can move the taper forward, it gives us more flexibility on rates. That seemed like a little bit of a walk back to me. I think the market assumed that if you're going to move tapering forward, you're also moving rate hikes forward. And that's reasonable to assume. But I think she was trying to walk that back a little bit. We'll see. We've got a lot of Fed speak. So there's no blackout period just yet. So I think we'll get a little bit of that walking back, and then you could actually buy some things. I like Apple despite the slowdown they predicted, because that doesn't usually get overdone. They're actually one of the companies that oversells the negative. And then beats on earnings. Only one company in the U.S. does that.
Seems like it's also the one company that trades basically with VIX. It was like Apple was a hideout. Real quick before I let you go, Bob, do you think there's any credence to that theory? I mean, I know there was some specific news flow around iPhones, but it sure as heck looked like the NASDAQ safety trade was distilled into solely Apple the last week.
Yeah, I would agree with that. Tech has been a safety trade, but again, market breadth was strong early and actually tapered off later in the day today. And that was also something that I kept an eye on. So I think that was good. I think you're looking at companies like Apple, they're sustainable. So even if you take hits, these are things that people don't necessarily trade. They buy and hold, companies like Apple. So I like it. I still like Amazon, Omicron or not.
All right. Thank you, Mr. Iaccino, for the take here, the cross-asset take. Bob always giving us a good little morsel of thought, some food for thought. Bob Iaccino, founder, chief strategist, Path Trading Partners.